Welcome to my $100,000 stock experiment, Sell Rules, week number 52, ending April 5th, 2019. This is really week 51. I started counting what was week 0 at week 1, so I have one more week in my experiment, but I'm going to keep referring to this as week 52 to be consistent. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. My basic premise is I started April 13, 2018 with $100,000 to invest. My goal was to double my money in 1 year and focus on developing and practicing my sell rules. Most of my trading's in my Roth IRA, and I have free trades and no tax implications. I reviewed my 2019 sells so far this year, and I noticed that I was choking out my stocks by selling at the 13-day simple moving average. I sold 5 stocks so far at that 13-day simple moving average. If I would have kept the stop at my 28-day exponential moving average, 3 of them would have sold, but only for slightly more loss than where I sold the stock. 2 of them I still would have owned and the gains would have been big, so approximately 3% or 3,000K in my portfolio. So I'm going to change that rule. So I've stripped out that 13-day simple moving average floor, and next week I'm going to be looking at that 8% max floor. Can that really be 7% or 6%, or is 8% the right spot for me? The market is in a confirmed uptrend, and the S&P 500 is behaving well. A few weeks ago, I had identified a few areas of resistance. The first one was at 2817. That's the solid blue line, and the S&P is above that. The next area of resistance was 2862, and we've also crossed and held above that for the week. You can see down in the volume section that we've had several up days in a row, which is very encouraging. The resistance I identified at 2862, the S&P was in that range January 26, 2018, and then it dropped down below it, and then it came back up through that range in August 27, 2018. The third area of resistance I identified was at 2912, and the S&P was above that point for a very short time from September 21st, 2018 to October 4th, 2018, and then the market basically tanked. So I'm looking forward to the S&P 500 getting above that 2912 mark. The VIX is the volatility index. I like to see that below 16, and it's at 1282. The lower the better on this one. I did purchase 6 stocks this week. I'm trying to take a close look at how I'm identifying stocks. Right now, I'm fascinated with the number of up days that stocks have. So 4 of the stocks I bought because they had up days. 3 of them had up days with volume. The bar chart is showing the stocks that I've held for just 1 week. The dash line is showing the $10,000 amount that I purchased of the stock. So 3 of the stocks are above that mark. 1 of them is right at that mark. And then the 9,200 is an 8% loss. So I have 2 stocks that are down, but they're not down 8%. I'm going to review the charts now, weakest, strongest. TWLO, I purchased that on April 1st for 127.12. I've held it 5 days and it's down 3.7%. I purchased this because it was showing 3 weeks tight, and it's been a really strong stock, but it wasn't in a pivot point. It does have a high relative strength and composite rating, and Stock Doctor gave it a B-. I did leave the floor on this stock at the 8%. SurveyMonkey, I purchased on April 1st for $18.27. I've held it for 5 days and it's down 3.7%. This one had 6 of the last 8 days up with volume when I purchased it. It has a relative strength of 89. The composite rating is not super high, 74, and the Stock Doc gave it an E. This is a new issue. It's an IPO, so Stock Doc doesn't grade IPOs too well. ACN I bought on April 2nd for $175.75. I've held it 4 days and it's up 1.4%. This had a gap up in earnings and it was in the pivot point. After the gap up, it went sideways, so I went ahead and bought it. I'm hoping that it continues up. We shall see. It had a relative strength of 85, composite rating 88, and stock doc of a D. ATR, I bought April 2nd, 2019 for 107.38. I've held it 4 days and it's up 1.3%. This is one of the stocks that had 6 of the 8 days up, and several of them were in volume. You can see all those green bars down in the volume section. I did raise this floor up to the 28-day exponential moving average. NEO, I purchased on April 2nd for $20.58. I've held it 4 days and it's up 1.6%. I did move the floor up to the 28-day exponential moving average, and it did have 5 of the 7 last days up with volume, but this is a low volume stock, but you can see those green bars down there. Boot, I bought on April 1st for $30.40. I've held this for 5 days. It's up 1.7%. This is the best performer in the group of new stocks. It had a huge volume on Friday at that number 1. Up at number 2, even though it had the big volume, that price action, it did close in the low for the day, which was up from the previous day, but still it was not high in the range of the daily spread, which is concerning. I did buy this stock because it did have 6 of the last 8 days up when I purchased it. Here's the current holding bar chart for the stocks that I've held for more than 1 week. I've numbered them the weakest to the strongest. And now I'm going to review the charts in weakest to strongest. CyberArk, I've held this one for 18 days and it's up 2.6%. I decided to leave the floor at last week's 28-day exponential moving average. This software group had a really rough week. Thursday, many of the stocks fell apart, and I don't want to choke this stock out by moving that floor up too close. Bold, I've held this stock for 16 days and it's up 2.5%, and I did move the floor to the 28-day exponential moving average. ADP, I've held this for 39 days and it's up 8.1%, and I did move the floor up to the 28-day exponential moving average. Keys, I've held for 18 days and it's up 4.8%. I did leave the floor at last week's 28-day exponential moving average. I don't want to choke this stock out. I want to see what it's going to do. My current gains in dollar value, I sort with the losers on the top so I can focus on taking care of the losers if I need to, and I let the winners just take care of themselves. So I have 2 dollar value losers. I've just held those stock for a week. I'm not going to do anything about those. And I look at the percentage change for the week also. So it has those 2 that were on my dollar value loss, and also CyberArk. That's the software one that had such a rough week. So I sort these with the losers on the top. I don't think I'm going to do anything about these losers there. I have my floor set, and if it gets triggered, then stocks will sell. The industry breakdown shows that I've added 2 stocks in software, 1 in medical, 1 in business services. Electronics is the same, and I've added 1 in retail. I highlighted in yellow where I'm concerned with my weekly tracker. My average gain is down from last week, and it's not very much. My largest gain is slightly up from last week, $40, but I need to see more of a gain. And I've held my longest stock that I've held is for 39 days, but I don't have any sluggers, and I should start seeing sluggers when I've had stock for 35 or 40 days. I did not have any sells this week. At the end of week 52, I have $18,865 in cash. The benchmark is showing my portfolio going sideways, and I'm not really happy with how it's performing. I'm still up 20% for my 52 weeks, which is awesome, versus the S&P at 8.9%. But I need to get better at picking some stocks that are that go up. My sample portfolio that I created on 3/27 is up 5% since I created it, which is a drag because I didn't buy any of those stocks. Last week it had been up 1.5%. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell if you want alerts when I post a new episode.